Welcome back to week 34. This is part two of week 34. We're going to talk about expenses. And we're going to start off by talking about the old cliche you have to spend money to make money. And that is nothing more true in business than that. The trick is you want to be as efficient as possible where you're spending your money in order to make more money. So, this might seem obvious, but the first step in knowing everything that you're spending money on, you want to know where all of those subscriptions are, where your costs are, the personal versus business expenses. A lot of times small business owners have a hard time separating the two because you're using the same credit cards, possibly the same bank account. You want to start by finding a method to keep track of all of those expenses so that you can easily split them out later. And don't forget to just keep receipts and notes and all of that. It's pretty simple. When it comes to expenses, we already covered tracking, comparing your period to period as well as against industry averages. So find those averages, those ratios, all that stuff, your labor cost, your cost of goods, rent expense, all of those things, and figure out where you are compared against what the industry averages are versus what you were, the same time last year. And then you definitely want to go through each of your expenses line by line every once in a while. This isn't, something you need to do once a week or even every quarter, but just go through and understand what each of those expenses are and why you're spending that money. One of the things that is easy to do is expense creep. So this is getting all sorts, signing up for services, signing up for solutions, programs, apps, whatever it is. You have these auto drafts in your account. You don't really notice them, especially when they're small, because that's an easy way to, just make a ton of money. If you're that type of business is, oh, I'm going to just auto draw $4.99 a month. And I'll get around to canceling that. It's only $5 a month. That stuff will add up. So look into all of that, pull up your bank statements and see what's getting auto drafted, your credit card statements, all that type of stuff. When it comes to cost of goods, you want to track your material costs regularly. So many vendors, even the ones that you're really close with and the ones that you have good relationships with, they still incrementally raise prices. And I mean, this is a part of, the economy. I mean, prices do go up, but when you get that initial super cheap introductory deal of, this is what it is, and it's very attractive and that's great, but they're going to go up. They need to make their money somehow, or they're going to make their money elsewhere. So just look at that when it comes to cost of goods in terms of the prices going up. Tracking the prices is very important and an easy thing to do is like pull out your old invoices and look at what you were paying last year, month to month. And there's a chance that everything's going to kind of go up, might be a couple pennies here and there, but overall that's going to add up in the long term. Some of your vendors, especially if you're good with them, they're just going to be upfront and be like, here's where I'm going to make money on you. And here's where I'm not going to make money on you. Don't argue that, because I mean, your vendors, your sales reps, they all have to make money. So there's going to be certain products where that you're possibly getting gouged, but that's fine because you're making it up elsewhere where they can give you a better deal on certain things. I've had plenty of vendors who are, just upfront say, I need you to buy these products so that I can continue to sell to you. And, so there's certain products that I'm buying, I'm possibly paying more than I need to, but I'm getting a great deal on a lot of other things. So just you work that out, work with your vendors on that one, work with your sales reps. Just be a decent human being when it comes to that. We already talked about vendors, and you can shop around for cheaper prices, but just remember that you can get a bad reputation as a customer. You do not want to get that reputation. So just keep that in mind. Once you've identified or investigated all of your expenses, you're going to create a plan to improve each. So you want to do it incrementally and think about it in the long term in terms of what really goes into that expense. So if you are cutting costs in one particular place, you don't want to screw yourself over somewhere else. So, cutting costs here is going to be great, but it's going to decrease employee morale, or it'll somehow affect my production months down the road, whatever it is. So think it out before you just start cutting costs left and right. Some costs are just necessary, and that's just a part of life. Like, you're going to have to spend money in order to keep your customers happy, to keep your employees happy. In the long term, you should be able to justify that. So just think about that as you're looking at your expenses. And you might even want to add more expenses because, again, you have to spend money to make money. So spending more money now, that's going to improve the customer experience or the employee experience or just your quality of life might be worth it. So think about that as you are looking at your expenses. And then last, figure out what your time is worth and then identify the things that you're doing that don't add value. We've got an entire session on that as well, but you can just think about what it is that you're doing that's adding value, which is great, and the stuff that you're doing that's just because you're trying to save money or that's just what you do. Think about whether or not your time is better spent elsewhere. So if you are spending an hour to do a certain task every week, and in that time you could potentially make more money than it would cost to outsource it. You want to just increase your profitability, your value by doing the things that make sense and not doing those non-value added things. And just don't forget the customer experience at the end. I think we've made that plain and clear. You want to make sure that you're cutting things that make sense to cut and not taking away from that customer experience. So that's it on revenues and expenses for week 34. And as always, if you have questions, give us a holler.